Hello and welcome to another trading video recap for a daytradersjourney.com, and this is for September 15th, 2015 for the E-mini S&P 500 on a 3-minute time frame. Now today's chart, you can see we had a strong bullish day, pretty nice trending day to the upside. I took a live trade here, labeled number 2, and took another trade on the E-mini Russell. But today I'm just going to go over this trade and other possible valid trades that I didn't take, but were valid setups based on my strategy, to review today's trading. Now in the morning you can see that we initially went down, broke this opening range, 6-minute opening range till the downside, but I wasn't looking for shorts yet because the EMAs were bullish. The exponential moving averages, the 21, which is the gold, and the 50, which is the purple, were bullish, 21 above the 50. So when this happened down here, broke to the downside, I wasn't looking for anything at this point because we had bullish EMAs and this wasn't really strong, didn't really continue to the downside. So I waited for price to decide which way it wants to go, and it broke to the upside here, showing some bullish strength. EMAs are bullish. So once we reached the swing high up here at this time frame, I started looking for my second entry method to get into a trade. So I drew these lines afterwards. This shows a nice little flag setup. But from here, I took the swing high and I started looking for my first trade. So you can see here, this green bar broke above the high of the previous bar, which is this red bar, which is the first entry. And I keep watching, looking for other entries. And you can see it went back down here and created a second entry right here. This bar broke above the high of this bar, this doji, and that's your second entry. And you wait for another pullback, and then we have this third entry. This green bar broke above the previous high bar, red bar here. It's basically a third entry. And the reason I'm not getting into these trades as any of these trades is because price hasn't pulled back to the EMAs yet. I do not take any trades until price is pulled back far enough. And far enough is a subjective term, but I use the EMAs to help me guide that. I want price to at least touch the 21 or go below it to look for a possible trigger to get into a trade. So anyway, this is another entry here, again the third entry, but I did not take this one because again we're not pulling back far enough yet. And then we have another pullback here below the 21 EMA for the first time, and now we come back up, and now we have a break of the previous bar here, break of the high of the previous bar here, and it's a bullish bar, which is, I like to have bullish bars, break the high of bullish bars to take longs. So your entry could have been right about here at 1958 in a quarter, and this is considered like basically a fourth entry if you're counting from here. And the reason I didn't get in right at here is because I entered a little late because I was waiting for price to break above this little diagonal line that I drew from the top of the highs. And you can see my green arrow points to where I got in, and this is where I got in. And basically after I got in, price went sideways and reached my break-even point, and then some, and then pulled back a little bit and took me out of my trailing stop. So it was a small profit for that trade, and that was the only trade I took on the E-mini S&P. After that, there was 3 other trades, possible trades that happened, and I described them here. The red circles are ones of trades that would have been stopped out for a loss. Blue circles are trades that would have worked out for a profit. So after I got taken out here on this trailing stop on this trade, which would have been right about here, you would then look for another possible entry. So this is the next swing high that popped up. You would start your count back here, and you would go 1 here for your first entry, 2 for your second entry, go back all the way up here, and then pulls back again. Then now you have a third entry, and this third entry actually price came back and touched the EMA. So you would think, okay, take a long right here at 1961. Which is that one tick high above the high of this green bar. Green bar, break of a high of the green bar or bullish bar is what you're looking for. The only thing that you're missing here, and you find out after you trade for a while, is that the swing high, the entry right here in 1961, and this swing high are very close together. There's not a lot of space. So it didn't really pull back that far, even though it pulled back to the EMAs, but the gap between this entry and this swing high was only 1 point. And we need to reach 2 points to get to break even. So as a rule, I would like to have at least 2 points of room between my entry and this most recent swing high. And you won't always catch that, so I still circled it as a losing trade, because normally you would just take that trade not knowing that you should have at least a 2 point gap between your entry and the recent swing high. So that's something that we can learn through time and practice. But if you did take this trade and took a loss, because you would have entered 1961, stop loss is 2 points, so 1959 would have been stopped right about here on this green candle. So after that happens, you always look for a chance to get back into the trade if it's still bullish. And even though we have a sideways action here, it's still bullish. And this horizontal line is the support line of this trade that you would have taken in this red circle. So once it broke the support line and you hit your stop, you only want to re-enter that trade if price goes back above that support line, which is this horizontal dashed line. And as you can see here in this blue circle, price went above it and broke above this bullish bar here at 1960.50. So I would have gotten back in here, or you would have a chance to get back in here at 1960.50 and place your stop 2 points below, which is 1959.50 and 58.50, sorry, and which one tick below this wick. I'll move the circle so you can see this trade a little bit clearer. And yeah, you can see here you would have gotten in here 1960.50, place your stop 1958.50. So this wick down here wouldn't have taken you out. And again, we're still bullish here, so everything's still the same. We now, with this 1960.50, do we have 2 points of room between the recent swing high? Let's see here, 1962. So we get a 1960.50, and we have 2 points. We have 1.5 points of room. So again, it's another tight area here. But if you took this trade, well, like we took this previous one, we would have reached full profit on this one. With 2 points of stop, we want to go 4 points of profit. So we're risking 2 to make 4. So I like to have a 2 to 1 reward to risk ratio when I'm trading. So this would have been a valid trade. That's why I circled the blue here. And now another example of a trade here is over here. This is second entry long. You can see price moved up here, then created another swing high. So you start your count here. 1, the break of this previous bar here is your first entry. Goes up, goes back down, break of the previous bar here, and it's a bullish bar, so that's a good sign. You want to take longs on the break of bullish bars on a second entry, and you would get in 1965.75, and it's 2 point stop, put you 1963.75, and you make it up here to your 4 points, 1969.75. So another full profit on this trade here. So you have one losing trade, one winning trade here, and the second winning trade here, following my methodology of entering in. And again, the 2 point spacing between your entry and the recent swing high is more of a subjective way of trying to find out if you've pulled back far enough in price. But the primary way I measure getting having enough of a pullback is price coming back to the EMAs, which it did here and here. So, and again here as well, you see price, the wick hit the top of this EMA here, and it's worked out over time. So that's it for the E-mini S&P. If you have any questions or comments, please leave them below, and I'll send some more videos to this website, and also come back and review other videos I have which explain my methodology and how I trade at daystradersjourney.com. Thank you very much.